Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, October 18th, 2011 is sponsored by Realtic. All right, let's get right into the mix. The markets, again, starting out sharply lower, then reversing in dramatic fashion as POMO came into the markets. And again, this is something we've talked about since yesterday. I've been discussing it with my members quite often here over the last day or two. In fact, I featured it in last night's Research Center nightly video. If you want access to those videos along with everything else inside the Research Center, just sign up for the free trial and you'll have a 7-day period of no obligation access to the Research Center. Bottom line is this, folks. Yesterday there was no POMO. What is POMO? POMO is Permanent Open Market Operations by the Federal Reserve. This is the same thing in QE2. QE2, they pushed the money into the market through buying treasuries. They're doing it again by buying long-term treasuries and selling short-term. So again, I believe today was $2.5 to $2.75 billion in treasury buying going on by the Federal Reserve. Yesterday, the key was there was no POMO going on. And again, you might say, well, how does that work out? Well, look at the market yesterday. Market yesterday fell all day long. Today, it starts out lower. POMO comes in and lifts the market dramatically higher. And isn't that amazing how you can see the market just turn around? You can almost see it happen right here. This buy program and this buy program just shot the markets up. There were some other rumors coming out of Europe as well about possibly eliminating shorting on CDSs, credit default swaps, stuff like that. Also, Merkel talking about a deal that may be in play within the next week or so, although we've heard all of that nonsense over the past. Bottom line is, last week we had POMO market again pushing upwards of 14% off the lows last week. Today, again, POMO. Yesterday, no POMO. It's very, very simple to just follow the charts. Tomorrow, you actually have another day of POMO. And the key is, in understanding permanent market open market operations, what you have to understand is that it's all due to light volume. The only way this works for the Federal Reserve to prop the markets up is simply by having very light volume. Light volume started last Monday when the bond market was closed due to the Columbus holiday weekend. And that was the Monday bond market was closed. Markets were open on Monday. Ever since then, the volume has petered out. We've been averaging about 200 million a day on the SPY. That again is about 150 million lighter than normal for the previous month before that. We were averaging about 350 million. So the light volume makes it so that one individual large buyer of the market can have a significant impact on the markets to the upside or the downside. And obviously, with the Federal Reserve, it's to the upside as they want to prop the markets up, keep things stable until the Germans and the French and everyone else in Europe can kind of come together and make a plan. And that's exactly what this twist policy, which is the new QE3, is in play to do. And in fact, I posted that POMO schedule on the Hot Charts and Alerts, which is inside the Research Center as well. If you want to get access to that, just join the Research Center and take a look at it. It's amazing stuff to really behold. Either way, you can clearly see the market early morning flush. Why did the markets sell off early on? Well, essentially you had IBM. IBM had very, very poor earnings compared to what they were expecting. Right now it's down about $8.50, was down over 10 at the lows. This is a big drop on IBM. I mean, you're talking about a 5% drop on IBM or so here, and that in relation to the daily chart, you can see how much of a run it had, and look at the dump that it's had since then. So IBM, again, sharply off the highs here on the daily chart, collapsing back down. That again has moved off the lows, but still, that was really one of the main reasons why the futures were a little bit weaker today. On the bright side, you did have a little bit of positive coming out of the financials. Goldman Sachs reported earnings this morning. Goldman Sachs, again, the numbers were not spectacular, but the market had priced in worse numbers. Therefore, Goldman Sachs moving higher today by $3.32. Bank of America also reported, and Bank of America is having a great day, up about 7.5% on the day, trading just off the highs of the day. So those are the two positives there. The negative, obviously, was IBM's report that was not pretty at all. Some of the smaller stocks that really were ugly were Crocs. Crocs is just getting murdered here today, folks. Down over $10. CROX is the symbol there. And that stock, again, down $10 to 16 and change. But again, Crocs has no relation to what the market's doing overall. It's really more IBM financials like Bank of America, Goldman Sachs. And then ultimately the whole deal comes together with POMO, Permanent Market Operations by the Federal Reserve. And as long as volume remains light, and this is something that most amateurs and mid-level traders don't understand, is that the POMO will only work if the volume stays light. So if you have panic reemerging out of Europe and volume all of a sudden goes to 350, 400 million, 2.5, 2.75 billion in POMO is not going to do a hill of beans. I mean, it has nothing to do with whether or not the markets can stay up or not. That'll overpower the markets. However, or overpower POMO, I should say, in the Federal Reserve. However, if volume remains light, then they should be able to continue to prop these markets up and not let us drop. So again, just keep that in mind, is that when you're watching on a daily basis, whether there's POMO or not, also take into account the volume. Today we've done about 150 million, and it's already 2:30 p.m. or just about 2:30 p.m. You have an hour and a half left to go. Chances are you probably do about 215 million today. There's maybe a little bit more volume than yesterday on that Monday, but that's about it. It'll still remain very, very light. All right, let's go to a couple other charts. Obviously, you can see the markets have come up here. The levels continue to work beautifully. You had to love this low pivot down here. This low pivot is my new baseline for a market breakdown or a market that stays up. That's at a level on the spiders of 119.20. The reason why that level is so important is because the last time we pulled back last Thursday, you got the same type of reversal like we did today. You pulled back into it on some not so great news. The markets rallied off that same bluish line right there, which if you zoom out a little bit more, you can see how important this level is. Going back to early October, this pivot high, these pivot lows, then this pivot low, and again today, the pivot low. And again, you have to know how to read the charts. You just read the charts simply, you're going to make money just by understanding them. And that's what it's all about, folks. All right. So markets again moving higher. Interestingly enough, as well, something that I talk about to the chat room in the intraday stock chat, which by the way, there's a free trial 7 days for that as well. And again, I encourage you to try the free trial. It's free. There's no obligation, really nothing to lose except to get some amazing insight into the markets, possibly make a ton of money as well. But bottom line is, we got this fake print yesterday all the way up to about 122.55 or so. And again, fake prints on my Realtick software have a tendency to play out 75+% of the time. It's an amazing, strange phenomenon, but nonetheless, these fake prints, again, continue to look like they're playing out. And look at this today. This comes out yesterday. We gapped down a little bit today, and within about 24 hours, we're nearing that high pivot. We still have a little bit more to go, but about $1 away or so on the SPY at this point from hitting that fake print and fulfilling it. And again, just imagine if you have software that's telling you the future by fake prints. And again, I'd say the last 5 fake prints have worked out beautifully in the market as well. And this one today looks like it wants to play out. The fake print again up here. Look at the markets just slowly heading towards that fake print level. All right, so again, just something to keep in mind. And again, we go over this in the Research Center as well as in the intraday stock chat. If you want to take that free trial, we encourage you to do so this very minute. All right, let's take a look at the dollar. The dollar again opened higher and initially had to push up, which makes sense, right? The dollar will go in one direction. The market will go in the opposite direction of the dollar. The market is controlled by the U.S. dollar, and essentially the U.S. dollar is being controlled by the euro, which is being controlled by things in Europe. The better things look in Europe, the stronger the euro gets, and therefore the weaker the dollar gets, and vice versa. And then obviously the markets go in the opposite direction of a weak dollar, which is exactly what's going on today. As you can see, initially when the market sold off, the dollar went up. And then all of a sudden the dollar has fallen all day long. What has the markets done? The markets have surged higher pretty much from that point on. All right, so that's what we're seeing here in the markets, a weak dollar. If we go to the daily chart, you had a nice bounce yesterday on the dollar, and even this morning a good bounce, but it's now stalling out a little bit. And again, the dollar, depending on which direction it goes, will ultimately tell the tale of which way the market goes. The market will always go in the opposite direction of the dollar these days. All right. Now today we have some big earnings announcements today, guys. Apple Computer is the one I'm going to touch on. Apple is reporting earnings after the markets close today. That's going to be a huge report. Apple is sitting right here at a double top 52-week high. Pierced it yesterday, pulled back. This is going to be the big telltale for the markets tomorrow, obviously. How does Apple do? In addition, I think it's important to recognize that we have about 4 to 5 billion in POMO tomorrow, which will have an impact on the markets if volume is light, meaning if it stays between 150 and about 225 million on the SPY, you should see the markets neutral to higher tomorrow. If the volume gets above 250 to 300 million in that range, then the markets will have no implication because of POMO. POMO will not work in that environment. All right, again, it's all a matter of how big is that 5 billion in regards to buy programs. How is it used to create short covering in other forms and so forth. And again, we'll watch that very closely. But again, Apple reports today after the close. Everyone's expecting phenomenal results. Will be interesting to see how those results do play out. Again, first report since Steve Jobs passed away. All right, couple other things to go over here, folks. I'm just scanning through. Let's go to the intraday charts on Apple. You can see the intraday chart just choppy on Apple, sideways kind of action, just up a buck 20. We do have some good gains, not only in financials, but Google's having a good bounce after pulling back yesterday, up about $7. That stock dropped about 10 yesterday, so it's slowly gaining back. Still wasn't able to get through 600 on earnings, though. There's just something of note. Keep an eye on that $600 level. If it gets through 600 on Google, Google's going to run all the way to about 625, which would be a nice double top right up here. So watch that level as well. What else do we have here? 3M is having a solid day, up about $2 on the day. Hewlett Packard up as well. MasterCard's up slightly. Visa's up slightly. American Express is up decently as well. Solar stocks are mostly positive, although some Chinese stocks are taking a hit today. And this is going to be very interesting to watch. If we go to BIDU, BIDU, the stock was down significantly here on the charts. Take a look at this chart right here. It dropped dramatically. What a drop on this chart here today. In fact, I gave out a great little scalping opportunity right here. It pierced this little pivot low. Look at the reversal off of that on an intraday basis in the intraday stock chat. Members made a lot of money on that. But either way, the Chinese stocks are seeing a lot of pressure today. If we look at SINA, SINA, you can see down $4 as well. The markets are nicely positive. These Chinese stocks are lower. So when I'm talking about solar stocks, First Solar's up, SPWRA, SunPower's up. Some of the Chinese solars are down today as well. And again, you're just continuing to see there was some Chinese economic net data last night that showed a weaker growth in China, and that seems to be affecting the stocks there as well. And there's a big question on whether or not China's going to have a hard landing and a big pullback now after doing all the stimulus spending over the last couple of years, or whether or not they're going to be able to survive. And the whole world will follow everything else. I mean, Europe is going to influence China. China's going to influence Europe and the rest of the world. It's all a global economy now as well. All right, let's go back to the SPY. Just take a look at the intraday action here just before I head off. Nonetheless, you can see that you do have some resistance right up here. We're kind of getting into that range. These are your next levels above. And again, just follow them. And obviously, you have the fake print up here at 122.55 or so. Again, I don't think that we'll hit that level today. I'd be surprised if we got there today. But I do think, again, maybe tomorrow or the following day we do get up to that level and possibly even go higher. All right, guys, again, take the free trial 7 days to the research center here at InTheMoneyStocks.com and the Intraday Stock Chat. Join the pros. Join the proprietary analysis of the elite that are making people money in ups and down markets. It doesn't matter anymore if you're a bull or a bear. You don't need to be a bull or a bear. You join the market when the charts tell you to join the market, either on the long side or the short side, or even in cash if the market's going to fall and you don't have the opportunity to short. You just pull back in cash. You wait for things to get cheaper, then go long again and make money. It's doable. We're doing it here. Take the free trial. Find out. Take care, guys.